And joining me now to discuss is CoinDesk Director of Data and Indexes, Galen Moore. Welcome back to the show, Galen. Great to have you after your time off on vacation. So Tether is subject to increased scrutiny by U.S. regulators and their history of opacity in terms of what is backing their reserves. So as you see these charts, is that opacity finally starting to catch up with them?
Yeah, I don't think so, Christine. I kind of tend to interpret the flatness that we've seen in Tether, and its market cap or supply has been flat at about 64.3 billion since the end of May. I tend to interpret that as a reaction to a bear market, which we now find ourselves in. There's no question about it, something like Tether is used as a quote currency, a kind of a money market. And that kind of demand has somewhat dried up, I think.
So how do you explain USDC's growth in comparison then?
Yeah, the sort of Tether FUD battle has to be discussed carefully. I don't want my inbox filled with hate mail, but I think, look, the truth is that something like Tether hasn't been broken. It is a one-to-one peg because the people who use it believe that it will remain solvent. The question of whether it's got one-to-one backing has not been put to the test. And I don't think traders are necessarily naive about the notion of a one-to-one peg. They just don't care about it. I mean, for the same reason, you don't go to the Bellagio in Las Vegas and demand to see their audited financial statements before you buy chips to use at the tables. The offshore markets where Tether is predominantly used are is that for me? Are they are, they're like casinos in many respects, other than one, which is that they do provide price discovery. So I do think the question of Tether's ability to maintain its peg to the dollar is a systemic question. It is a systemic risk. It's one to be aware of as a kind of underlying risk in any crypto investment. But the growth of Tether competitors, I don't think indicates a lack of faith or a sort of a shrinking back from Tether.
Well,
it's
just
more
going
of
back. We saw that chart on USDC growing on Binance, and they've continued to go up as the price, or rather the balance of Bitcoin has also increased on Binance. So it's been keeping up with that. But we also have another chart showing Tether balance on Binance that has nearly halved since June.
Although at the same time, it's back at the levels where it was in the spring, right? I think this is a difficult chart to interpret. I think what you're seeing here is, to some extent, response to market dynamics, and then maybe to a little bit of error correction in the heuristics that are used to determine where Bitcoin is being held, or where Tether is being held in this case.
And then we saw the stablecoin chart between USDC and USDT. Yeah. What's going on here?
The growth of USDC is remarkable. The flatness of Tether for the past 2 months, also remarkable. I think you see the continued growth in USDC because there is a kind of investor that does not trade on offshore exchanges and does not wish to deal in an instrument like Tether. Either doesn't wish to or cannot, is prohibited from doing so. And I think USDC's growth is, I would guess, primarily driven by that. The issuers of Tether are correct pointing out that this is growth on a much smaller base. Tether's gigantic. There's no question about it. But the flatness in it is definitely something to take note of.
And so, more importantly, how is this all impacting the price of Bitcoin?
I'm not sure whether it's, we're seeing Bitcoin crossing 40,000 today. The XBX over 40,000, despite the bad news for Bitfinex and the issuers of Tether. That there's apparently a potential criminal indictment in the offing. That came out a couple days ago, I think.
Some folks have suggested that traders are fleeing from Tether in favor of Bitcoin, in favor of USDC, which, Tether was used as the trade to get out of volatile cryptocurrencies, but is the argument now that people are trading out of Tether into safer safe havens?
Well, look, I mean, it's not a question of a haven. I think it's more a question of what's convenient. To put your money onto an exchange, to make a bank wire transfer, these things can take days. Having your money in a cryptocurrency form, that's the advantage of a stablecoin. You have it in cryptocurrency form; it's available instantaneously, and that is better than having it in Bitcoin, where it can go up and down with the market. You want to sort of time your entry or take your time deciding which assets to invest in. You keep it in a stable coin, much in the same way you keep it in a money market fund in your brokerage account. The question of like Bitcoin coming back as a quote currency, I don't see it. That was the era of 2017 when altcoin trading first emerged, and we saw Ether and Bitcoin used as quote currencies. The decline since then and the replacement by stable coins is not some kind of secular thing.